Hi, I'm Sophia Aribo and you're watching forecasts on Dukascopy TV. Earlier this week, the euro briefly hit a high of 1.39 against the dollar following the release of eurozone data. Joining me on the line to discuss how he sees the pair moving in the short, mid and long term is Peter Frank, Global Head of G10 and Asia FX at BBVA. Peter, your 1 month forecast is 1.35. Why do you see the euro falling against the dollar?
We think that after the spike higher, it went through 1.38 and all the way up to 1.39.50 just for a few moments. But we think that what's happened in the hot money market, at least, certainly for the speculative flows, what's happened is that a reasonably large net long has been accrued in the euro, and we think that this has been unwound into the ECB meeting, and possibly there will be some dovish content to that meeting this week that will spill over and drag euro lower ahead of what could be some kind of policy response a month after. We think that fear, compared to what will be a month of fairly optimistic and sharply improving US data, should be enough to get euro-dollar down 2 to 3 points back to where it was a couple of months ago.
You see it falling even further against the dollar in 3 months' time. Will this be markets continuing to respond to worries over deflation now that the European Commission has revised its inflation figures to 0.8% for this year and 1.2% for 2015?
Very low inflation is something that could be a worry for the ECB going forward, and it's certainly going to be the key driver for them if they're going to introduce some form of QE or some other form of monetary policy stimulus measures in the next couple of months. And we think that will be a key driver. It's not just inflation, it's also whether there's a further couple of months of slow improvement in domestic demand data as well. If there's a big jump in domestic demand, they may ignore the inflation in the short term, but that's more of a risk case than a central case.
And lastly, Peter, your forecast of 1.35 in 12 months shows not much movement over the course of a year. How much has this prediction been influenced by the possibility of ECB head Mario Draghi going ahead with quantitative easing?
We think certainly if the QE is a lingering threat and it's not actually delivered in the next, say, 3 to 6 months, then you could have a 6-month period where the euro could underperform, particularly if in that period we have much stronger data in the UK, in the US, where the growth rates are beginning to get fast enough to have the market switching to when the first rate tightenings are in the respective cycles. We don't think that euro-dollar will drop under 130 within that time frame between 6 to 12 months. We think it could drop as low as 133, but we think it will nudge higher and trade pretty much mean reverting around 135 on average in the 6 to 12 month horizon, which is why we've got that 135 out there for a year from now.
That's all we have time for now. Natalie MacDonald will be bringing you another edition of Forecasts on Friday, so please join us then. Goodbye.